Welcome back to the Noobs Selling Options channel, everyone. If you are ready for a real, numbers-driven deep dive today, well, you are definitely in the right place. Take a quick second, hit that like button, and subscribe so you never miss out on these breakdowns. Today, we're looking at the absolute IPO sensation that literally has the entire market buzzing right now, Cerebras Systems. But look, we're not just going to sit here and talk about the hype. We are going to look under the hood and actually map out an epic $1,100 plus 3-year price target. We're building the AI fortress. And Cerebras, it just might be the crown jewel.
So just to give you a quick roadmap of our explainer today, here's the agenda. We'll kick things off with the Cerebras IPO sensation, then we'll decode their PEG ratio, model a conservative 35% growth rate, go over my exact trade entry plan, and finally wrap it all up with that juicy 3-year price projection.
All right, let's jump right into part 1, the Cerebras IPO sensation and their explosive market debut.
The absolute madness of that first day on the market was just undeniable. I mean, Cerebras priced their IPO at $185 a share, right? But the demand was so overwhelming it actually opened at $350. It spiked even higher to trigger a volatility halt and finally closed day one at $311. But, why the frenzy? It really comes down to two things: their tech and their partners. Cerebras builds these incredible wafer-scale processors. Their Wafer-Scale Engine 3, or WSE3, is literally a single massive silicon wafer. To put that in perspective, it's roughly 58 times larger than Nvidia's leading B200 chip, and because it's all in one single wafer, data doesn't have to travel across external cables. That makes it up to 15 times faster for AI inference, all while using less power. The market saw this and instantly recognized the potential. It's exactly why OpenAI signed a staggering $20 billion deal for Cerebras inference compute capacity, and why Amazon Web Services integrated them directly into their enterprise cloud offerings. These deals, they're huge. They took Cerebras from a niche player to a legitimate heavyweight challenger to Nvidia.
Moving on to Section 2, decoding the PEG ratio to find fair value.
So, the initial valuation metrics for Cerebras right now are, well, they're deeply distorted. You're probably familiar with the PEG ratio. Price to earnings to growth, it's a fantastic tool for figuring out if a growth stock is actually fairly valued, with a 1.0 generally being the sweet spot. Now, if we look backward at their trailing FY 2025 metrics, Cerebras is sitting on a PEG of 3.7. That makes the stock look ridiculously expensive. But if we look at the forward metrics, things get wild. Because that massive $20 billion OpenAI deal is going to be recognized over the next few years, it creates this artificial one-time top-line explosion. Basically, you get this hypothetical 950% earnings spike, which artificially crushes the forward peg down to a ridiculously low 0.02. So, neither of these numbers, the backward-looking 3.7 or the artificial 0.02, is actually giving us the true picture of what this company is really worth today.
That leads us perfectly into Section 3, modeling conservative 35% growth to establish a realistic baseline.
To figure out what the stock is actually worth, we've got to strip out that crazy one-time top-line explosion and apply a much more realistic, long-term compound annual growth rate. For this explainer, we're using a conservative 35% growth rate, and we're doing that based on 3 key factors. First up, the law of large numbers. Look, going from $510 million to $7 billion in revenue is vastly easier than doubling from $7 billion to $14 billion. Growth just naturally decelerates as you get bigger. It's a fact. Second, margin compression. Cerebras posted a totally stunning 47% net margin in 2025. But as they scale globally, deal with supply chain hurdles, and inevitably get into pricing wars with Nvidia and AMD for that enterprise market share, that margin is absolutely going to compress down to a more realistic 30 to 35%. And finally, the third factor, R&D burn. This AI arms race requires a massive amount of capital expenditure. Developing the future WSE4 is going to seriously eat into their free cash flow. So when we factor all of this in and assume they average about $8 billion in revenue over the next few years, their normalized annual earnings land right at roughly $2.8 billion.
Okay, let's do the underlying math here. When we take those normalized earnings of $2.8 billion against roughly a $67 billion market cap, we get a stabilized forward PE of about 23.9. Now, if we take that 23.9 forward PE and divide it by our conservative 35% growth rate, we arrive at this magic number, a PEG ratio of 0.68. So what does this actually mean? Well, even with heavily tapered, conservative expectations and much tighter profit margins, a 0.68 PEG signals that this stock is seriously undervalued relative to its future earnings potential. In traditional tech investing, anything under 1.0 is generally considered a screaming buy. For a pure-play AI infrastructure stock, this establishes an absolutely incredible baseline.
All right, let's shift gears to Section 4, the trade entry plan, and putting some actual skin in the game.
I always believe in being completely transparent with these explainer breakdowns, so I want you to see exactly where my money is going. I went ahead and initiated an entry with 10 shares of Cerebras, using a limit order that filled in an average price of exactly $329.
But here's the thing. You never, ever want to go all in at a single price point on a highly volatile new IPO. That is a recipe for disaster. That's why I'm using a structured scale-in strategy here. My specific plan is to enter 10 more shares only if the price drops 20% from that initial $329 entry. Look, newly public companies, especially in this crazy AI sector, they're going to swing wildly. It's going to happen based on news, lockup expirations, market sentiment, you name it. Waiting for a strict 20% drawdown before adding that next block of shares provides a solid safety net. It helps average down my cost basis intelligently rather than just blindly chasing the hype.
And that brings us to our final part, Section 5, the 3-year price projection. Where will this stock actually be?
Assuming Cerebras executes their AWS and OpenAI deployments smoothly, which is absolutely key. Let's just walk through the breadcrumb math here. Remember, we establish our normalized baseline earnings at $2.8 billion. If we grow that bottom line by our conservative 35% every single year, here's what that timeline looks like. In year 1, we sit at $2.80 billion. Year 2, multiplying by 1.35, we hit $3.78 billion. By year 3, we're up to $5.10 billion. And by year 4, which is exactly 3 years from our starting point right now, those normalized earnings project out to a very impressive $6.89 billion.
Okay, now for the climax calculation. If we want our target PEG ratio to sit at a perfectly fair value of 1.0 and our growth rate is 35%, well, the market should assign Cerebras a PE ratio of 35. Simple enough, right? If we take those year 4 earnings of $6.89 billion and multiply them by that 35 PE ratio, we get a target market cap of $241.15 billion. Now, growing from today's $67 billion market cap to $241 billion, that is a 3.6x multiplier. And if we apply that exact same 3.6x multiplier to a baseline $311 stock price, we arrive at an approximate $1,119 per share target in 3 years.
Which really brings us to our reality check. Hitting a $240+ billion valuation and an $1,100+ stock price by 2029, it's highly achievable for a pure-play AI inference company. But we've got to ask ourselves this critical question. Will they get there smoothly, or will other factors weigh them down? Keep in mind, if the stock starts nearing $1,000, Cerebras would probably execute a stock split. On top of that, young tech companies heavily issue stock-based compensation to attract top engineers, and that actively dilutes the share pool. And finally, if growth drops below that 35% mark in the outer years, multiple contraction is going to lower that PE ratio, which drags the share price right down with it. But even with all those caveats, the underlying fundamentals suggest massive upside potential here. So what do you think? Drop a comment below with your own 3-year price target for Cerebras. And hey, before you go, please give this explainer a like, hit subscribe to the Noob Selling Options channel, and I will see you in the next AI Fortress Deep Dive.